Hi and welcome to Swissquote's Daily Market Talk. It's Monday, November 3rd. The week starts with a jump in Korean AI-related companies after Nvidia revealed more deals with these companies last Friday. Then Palantir, AMD, and Qualcomm will be revealing their quarterly earnings this week to add more spice to the AI and technology theme. Elsewhere, crude oil kicked off the week upbeat as OPEC announced during this weekend that they will pause their supply increases between January and March next year, but the bulls here look quite hesitant this morning despite the news. So we will talk about all that and more. But before we do, please keep in mind that opinions are my own and this is not financial advice. So last week ended with slowing appetite after the Fed cast doubt on another 25 basis point cut in December, and the big technology earnings failed to impress investors despite beating lofty expectations. But nearly two-thirds of the S&P 500 companies already reported their earnings so far, and they actually printed a more than 10% earnings growth. That's higher than expected by analysts, and that is the fourth consecutive quarter of double-digit earnings growth according to FactSet. And even though last week was a hectic one, the S&P 500 still closed the week some 0.71% higher, while the Nasdaq 100 extended gains by nearly 2% to a fresh all-time high level. Energy sector especially closed last week on a stronger note after Exxon and Chevron reported their quarterly earnings on Friday. Both companies, both oil giants, beat the market expectations primarily due to strong production growth and operational execution, and that despite the headwinds from lower oil prices of the moment. So in detail, Exxon leaned heavily into growth, especially in Guyana and Permian Basin, and increased its dividend, of course, while Chevron's more conservative emphasis on cash flow, share buybacks, and dividends, well, combined with the Hess deal, obviously resonated well with investors last week. Shell also reported earlier better than expected results. So SPDR's energy fund, which tanked after the April tariff announcement from the US and regained the pre-announcement levels later than and fell again from September, yet somehow managed to hold support near a critical Fibonacci retracement level tested on Friday, the 50-day moving average to the upside, but unfortunately failed to close the week above this level as concerns regarding the low price environment in the oil markets kept the bulls from further extending their bets on Friday. And indeed, the barrel of US crude found buyers into the $60 per barrel level last week, keeping the price of a barrel above the levels that we've seen prior to the beginning of the latest Russian sanction, remember, with Rosneft and Lukoil. But the 50-day moving average here continues to cap the top side on ample supply from OPEC and Americas, and also the uncertain global demand dynamics. In this sense, Paris-based IEA predicts that the global oil supply will reach 3 million barrels per day this quarter and rise to a record high, a record glut next year. Perhaps as a reaction to that, OPEC announced this weekend that they will stop bringing more barrels to the market from January to March after an additional 137,000 barrels that will be brought to the market in December. So that certainly helped US crude start the week on a positive note, but the oil bulls here look hesitant to say the least in order to break the key technical levels and the $62 to $62.15 per barrel range, including the minor 23.6% Fibonacci retracement on June to October slump, and the 50-day moving average will likely remain a high bar to jump above for the oil bulls for the moment. That, in interesting contrast with clean energy funds that have been performing quite well since April dip, and that despite the White House and Donald Trump's push against alternative energy sources. In this context, VanEck's global clean energy ETF jumped more than 60% since the April dip and trades with a 24% discount compared to 2022 peak levels, meaning that there is still some upside potential to be discovered here for investors who are interested in these clean energy funds. Because in the medium run, AI and technology demand should continue to boost appetite in energy providers, both traditional, alternative, and nuclear, because AI demand alone is expected to add hundreds of terawatt hours of demand in the next decade, mind you, which will obviously be topped by growing demand from emerging market economies. So energy does remain an interesting play for investors, and that regardless of what type of energy you like the most or you would support financing. And speaking of AI, another week starts with strong appetite for AI-related stocks. This time it's Korea again. The Korean technology names are leading gains this Monday morning in Asia after Nvidia announced by the end of last week, and as it had promised earlier last week, to supply over 260,000 of its chips to South Korean government and also to leading companies there, including Samsung Electronics and SK Group. So the deal is now estimated to be worth around 8 to 12 billion US dollars for the GPU supply alone. No matter Nvidia is going to be positively impacted, but Samsung is up by more than 3% this morning and SK Hynix more than 10%. And if you want to know the truth, well, even Korea's chicken-related companies got a boost last week after Nvidia CEO Jensen Huang was seen eating chicken at a Korean restaurant with Hyundai and Samsung executives. And Nasdaq futures, on the other hand, are in the positive territory this morning at the time I'm talking here and leading gains into the European Open. Voila. This week, and in the continued absence of the US data due to the ongoing US government shutdown that will, by the way, become the longest in history come Thursday, investors around the world will continue to watch earnings, especially from the US AI-related companies. So in the sense, Palantir and AMD, which recently announced deals with Nvidia, and Qualcomm, which recently revealed that it will enter the AI chip market to compete. Nvidia will be going to the earnings confessional this week, while on the other hand, McDonald's and Shopify will help investors find some kind of clarity on US consumer dynamics, as concerns about the US consumer health are rising these days, along with presumed weakness in the US jobs market despite the absence of data, and some cracks also in the housing market. But the US dollar remains relatively strong, and that despite the underlying shenanigans in the US and despite the US government shutdown. A more hawkish outlook from the Fed last week certainly helped the greenback recover this year's heavy losses, but the US dollar's recovery is also due to a strong sell-off in two major peers, namely the Japanese yen and the pound sterling. The former, so the Japanese yen, because of the new Prime Minister Takaichi's expected support for easy monetary policy there, and the latter, so the pound sterling, on budget concerns into the autumn statement in the UK and increased odds that the Bank of England must intervene sooner rather than later to prevent a further economic meltdown in the United Kingdom. So the Bank of England will be meeting this week and was previously and still very much expected to announce no change at all to its rate policy. But there is a growing chorus out there that the bank could announce a surprise cut this week. Well, that's, I think, not a major possibility, but at least sounds sufficiently dovish to confirm cable's medium-term bearish trend below the critical 131.40 Fibonacci level. So this is all for this Monday morning. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
This content is intended for individuals who are familiar with financial markets and instruments and is for information purposes only. The presented idea, including market commentary, market data, and observations, is not a work product of any research department of Swissquote or its affiliates. This material is intended to highlight market action and does not constitute investment, legal, or tax advice. If you are a retail investor or lack experience in trading complex financial products, it is advisable to seek professional advice from a licensed advisor before making any financial decisions. This content is not intended to manipulate the market or encourage any specific financial behavior. Swissquote makes no representation or warranty as to the quality, completeness, accuracy, comprehensiveness, or non-infringement of such content. The views expressed are those of the consultant and are provided for educational purposes only. Any information provided relating to a product or market should not be construed as recommending an investment strategy or transaction. Past performance is not a guarantee of future results. Swissquote and its employees and representative shall in no event be held liable for any damages or losses arising directly or indirectly from decisions made on the basis of this content. The use of any third-party brands or trademarks is for information only and does not imply endorsement by Swissquote, or that the trademark owner has authorized Swissquote to promote its products or services. Swissquote is the marketing brand for the activities of Swissquote Bank Limited, regulated by FINMA, Swissquote Capital Markets Limited, regulated by SISEC, Swissquote Bank Europe SA, regulated by the CSSF, Swissquote Limited, regulated by the FCA, Swissquote Financial Services Limited, regulated by the Malta Financial Services Authority, Swissquote MEA Limited, regulated by the Dubai Financial Services Authority, Swissquote PTE Limited, regulated by the Monetary Authority of Singapore, Swissquote Asia Limited, licensed by the Hong Kong Securities and Futures Commission, and Swissquote South Africa Limited, supervised by the FSCA. Products and services of Swissquote are only intended for those permitted to receive them under local law. All investments carry a degree of risk. The risk of loss in trading or holding financial instruments can be substantial. The value of financial instruments, including but not limited to stocks, bonds, cryptocurrencies, and other assets, can fluctuate both upwards and downwards. There is a significant risk of financial loss when buying, selling, holding, staking, or investing in these instruments. Swissquote makes no recommendations regarding any specific investment, transaction, or the use of any particular investment strategy. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. The vast majority of retail client accounts suffer capital losses when trading in CFDs. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Digital assets are unregulated in most countries and consumer protection rules may not apply. As highly volatile speculative investments, digital assets are not suitable for investors without a high risk tolerance. Make sure you understand each digital asset before you trade. Cryptocurrencies are not considered legal tender in some jurisdictions and are subject to regulatory uncertainties. The use of internet-based systems can involve high risks, including but not limited to fraud, cyber attacks, network and communication failures, as well as identity theft and phishing attacks related to crypto assets.